Good day all. Ira Epstein of Linn & Associates with your metal market wrap-up. And this wrap-up is for Thursday, and we're sitting here now on October 7th, 2021, about 6:15 p.m. So now let's talk. What do we have? In an hour and 15 minutes or so, the Senate is to vote on the debt ceiling. I'm sure it's going to go through. We will then have until December 3rd for the Senate to screw up other things, as they'll argue about the reconstruction bill, what should be done. Budget might be a good idea, getting what's going to happen with this debt ceiling. December 3rd was an interesting time that Mitch McConnell picked. That means it gives enough time to have a reconciliation vote, if that's what it's going to take to pass whatever is going to come up from the Democratic side on their bill. And that gives you all the publicity you want. It also forces the hand, because if they can't get votes through, and remember, you'll be through your debt ceiling at that point, what happens next? Well, can you imagine for Christmas people don't get their Social Security and the government shuts down? So the odds of that happening are zero. I want to make that clear. Zero. The odds of the Senate deciding that they have to stay in session to miss their Christmas vacation to get these bills all done, I'm going to give them zero chance as well. They won't do that. Why do you think this all just got done now? October 18th, yes, it's coming, but next week the Senate's taking its 1 week break. So you'll have to understand politics, as facetious as I sound about it, to really understand the nature of the people in politics and how they handle events always at the last minute. Enough said on that. The good news, and there's a lot of good news. The good news was we do have a reprieve for a while. We're not going to default, and that no default set a lot of markets off to the upside. I told you it's going to be volatile in September in stock indices. Could I be wrong? Well, actually, in October. September was the down month. October is going to be the volatile month. You're getting it. You see it on all the charts. Energy markets don't stop. Now, that becomes fascinating, and I don't think the break on interest rate futures is going to stop. You'll get corrections, but I don't see it changing. We, tomorrow morning, get the all-important jobs data number. I think it's a given that unless it's a negative number, and I don't give that the market's going to look for the Fed to begin the tapering process. We saw the jobless claims very good looking today. They were down to 328. They were lower than the guesses. I was a little surprised that the Challenger Group came out and said that the corporations are actually planning more layoffs. I would have thought more hiring. But what I am looking for is proof tomorrow that when the government ended that $300 a check per person, and now you got the Christmas season and so on, that people are looking for jobs. If they don't, it means something else is amiss. And it's not going to be as simple to figure out as you're being led to believe, or I am. Maybe that's what it is. I think that it would be a good number. Could we get a whisper number of 600, 700,000 jobs? Yeah, we could. So when we look at the gold market, it's still not acting good. This market's in trouble. It can't seem to jump with Bitcoin, others that have jumped up to new highs. It's got a real dilemma. It's just sort of stuck here, as you can see. The pattern in the market is one of a lower low, higher high. It is not trending. It is stuck at the 18-day average of closes. I call that the line in the sand. The Bollinger Bands are now doing this. They're putting their arms around price and they're coming in, as you can see. Why does that happen? Because if you take a look at the formula for the Bollinger Band, what happens is it will do that as volatility comes out of the market, and it just keeps narrowing in. Think of this then becoming a spring that is going to spin around in an area like that, which we'll call a pipe, and it'll break out. You're not there yet. That's not quite the pattern that I see. In momentum, you're running out of momentum and just sort of drifting sideways. So I see nothing there. Now, for the first time in a very long time, you have to go back over here in early September, we see the gold-silver ratio starting to favor the silver market. As the price goes down, you need less and less ounces of silver to buy 1 ounce of gold. When I look at the silver market, well, you've come up here, and where's the battleground, the 18-day average? Do I think traders are buying here saying, come on, maybe one of these times the market will give me that kicker where it's going to go. I do. And I think they'll have to be careful because it's a big risk. Let's assume you buy the market at 22.55 and a half. You're not wrong on the pattern until 22.18. It's 37 cents. Now you'll say, oh, that's not that much. Really, it's $1,800 in the futures markets. I think that's a lot of money. In the copper market, tomorrow, actually right now, China's reopening on mainland China at the end of the Golden Week, and their financial markets are now adjusting to all that has gone on this past week. Now, we all know that Hong Kong, which is China, they are looking at this point in time, and they have been trading, so now the mainland gets to catch up. We'll see how this works in the copper market. But the copper does like what's going on. In Peru, you've got to keep your eye on copper because there are strikes going on the roads where they are blocking shipments of copper. That is something to keep your eye on. Not at the mines, but they can't get this being shipped. In my full research report today, I showed what above ground world supplies that are deliverable on exchanges look like. Try to imagine you were up here and you've nosedove like that. That is what's been happening with world visible supplies, which means deliverable product. And that's the important thing. Remember, on futures contracts, there are specifications. You can't just go out and get your copper in your backyard and take it. It's got to be certified. It's got to meet all the specs. It has come down dramatically. That is the important thing. So we have to wait. We have to see how this is all going to play out. While the trend is down with lower highs and a legacy of a lower low from there to here, you also recently have higher lows. So you're really doing one of these things. You're coming in like that. Very dangerous to trade patterns like that. When you look at the platinum market in the metal, you got a lower low, higher high, pretty much sideways. I don't know if tomorrow we'll want to come back to this 18-day average, but you certainly were hitting it every day through there without a trend. In the palladium, you've narrowed in tremendously the Bollinger Bands, and that's the beginning of a basing pattern, in my opinion, the very beginning of one. So I'll be watching that. You're also trying to get momentum picking up a little bit. And in the dollar index, the dollar is still overbought, can't seem to pump through that high, leaving still open, and I've explained this to you this week, this idea as to where is that 18-day average eventually going to be hit again. And that number keeps climbing, which means even though we lost the embedded reading back here, the break is probably going to be a lot less than traders are preparing themselves for. I try to teach all that, and I do it in some interesting ways. You might want to take a look at this because here's one of the ways I teach it. Welcome. I'm Ira Epstein, and I'm here to talk about my enhanced Bollinger Band course. Now, many of you have taken my regular charting course, and if not, you might think you know something about Bollinger Bands. As you know, Bollinger Bands are an algorithm designed to keep the market trading within it 95% of the time, and on a chart, it will offer on the top part resistance, on the bottom support, and the idea is the market will travel within them. We know that sometimes it latches onto that band, goes up or goes down. Well, how do you play with that? Can you pyramid the positions off that type of thinking? Well, I've applied all three of these into 13 different videos that teach you my concept of it. And from that concept, you're able to work with weekly charts and or daily charts. The 13 videos, each about 7 minutes long. The idea here is not to put you in school forever, but to teach. Now, if you haven't tried my complete futures research, I throw that in as well. Whether you've tried this or not, I think it's worth taking a look at. I think you're going to learn something from there. That research, by the way, covers twice daily market updates for you and access to what I call window envelope numbers, which I think are very important when looking at these Bollinger Bands. The next part is a trial to our charting software so you can make your charts look the same way that mine do. It's that simple. Where do you go with it and how do you get all this? It's simple. You go to our website, www.iraepstein.com. If you go to the word education, everything you need is answered there. You can also call my staff. They'll be happy to help you get set up. I'm Ira Epstein on the road to your education.